Press the elephant in the room, that FDA decision on PEMGARDA.
Absolutely. Ideally, they'd have a clear plan to address the FDA's concerns. Maybe they've already resubmitted their application or they're working on new data to support their case.
So basically, they need to show everyone that they've got a plan, they're executing on it, and they're not going to let one little FDA hiccup derail them.
Exactly. If they can do all that, well, let's just say it would send a very positive signal to the market.
The stock could really take off. But now let's flip the script. What's the worst case scenario here? What should investors be bracing themselves for?
Well, the worst case scenario is that it's just bad news across the board. They miss those earnings expectations, which tells everyone that the business is struggling.
Not a good start.
And then they announce delays or setbacks with VYD 2311. Maybe the clinical trials aren't going as smoothly as they'd hoped.
So now there are doubts about their long-term potential.
Right. And to top it all off, they have no clear path forward for PEMGARDA after that FDA rejection.
So basically, they're stuck in a rut with no obvious way out.
That's a recipe for disaster, to be honest. Investors would likely panic and the stock could plummet.
Okay, so we've got the dream scenario and the nightmare scenario, but let's be real here. It's probably going to be somewhere in between, right?
You're absolutely right. There's a whole range of possibilities. Maybe they beat earnings, but the VYD 2311 update is kind of lukewarm.
Or maybe they miss earnings, but they have some good news about PEMGARDA. Like maybe they're making progress with the FDA.
Exactly. It's all about trying to see the bigger picture. Don't get too caught up in any one data point. Instead, look for the overall trend.
Is the company moving in the right direction? Are they making progress on those key goals? Are they tackling the challenges head on?
Those are the questions investors should be asking.
And remember, this is a marathon, not a sprint.
Well said. We've talked a lot about the company and their products, their stock, all that, but there's one thing we haven't really touched on yet, and that's the ethical considerations.
That's a really good point. I mean, they're developing therapies for a global pandemic. That's got to raise some questions about their role in society, the impact of their decisions.
It definitely does. We don't have any information about specific ethical controversies surrounding Invivyd, but it's always something investors should think about, especially with healthcare companies.
Absolutely. Things like drug pricing, access to treatment for everyone, transparency in their clinical trials, these are all important things to consider.
And then there's the potential for unintended consequences. Every new therapy, it comes with risks, right? Potential side effects. Investors need to understand how the company is managing those risks, how they're ensuring patient safety.
It's a good reminder that investing, it's not just about numbers on a spreadsheet. It's about understanding the real-world impacts of a company, whether their actions line up with your own values.
So now that we've covered all of that, let's come back to that big question. Knowing everything we know now, is Invivyd